the dinar daily, across the United States. Subtle but distinct signals are emanating from the depths of the financial industry, catching the attention of many experienced investors who find themselves both fascinated and exercising a high degree of prudence. For over 10 years, the conversation about a possible revaluation, or RV for currencies like the Iraqi Dinar (IQD), the Vietnamese Dong (VND), and the Zimbabwean dollar (ZWL), has swung wildly between optimistic hopes and firm disbelief. To a large portion of the financial community, the concept of these currencies suddenly skyrocketing in value was easily dismissed as a fantasy, frequently relegated to the realm of mere hype and unverified rumor. However, a notable shift has been unfolding in recent months, especially in the last few days. In the often invisible workings behind conventional finance, locations where currency is exchanged across the nation are undergoing silent yet significant updates. Banks that once routinely deflected queries with pre-written, dismissive responses are now reportedly beginning to activate live rate screens and internal systems that had previously been completely inactive. This change in operational status has created an atmosphere charged with a mix of urgency, the sense of a cautious opportunity, and a growing anticipation that is becoming increasingly difficult to dismiss for those dedicated individuals who have held on to these currencies for extended periods. Enduring skepticism and sometimes outright mockery from others, this evolving situation feels like the first substantial confirmation that their long-standing patience might finally be rewarded. While formal, public confirmations remain extremely scarce and tightly controlled, internal reports and private communication channels circulating within the banking network suggest that what was once a purely theoretical discussion is now rapidly transitioning into a tangible, practical reality. The revaluation of these specific currencies is no longer seen as just an internet whisper or a subject confined to secretive investor forums. It appears that a significant financial event is genuinely in motion, quietly but undeniably signaling what could be a historic turning point in the global financial landscape. The phrase, "quietly going live," has quickly become a pivotal rallying cry among those following these currencies, sparking intense discussion and scrutiny across private chat groups, insider circles, and various online forums. To the average person outside this highly specialized financial niche, this whole scenario might sound abstract or even confusing. But within the inner workings of the banking sector, this operational phrase carries significant, real-world weight. This movement does not point toward a sudden, splashy announcement dominating mainstream financial news headlines. Instead, it indicates a series of meticulously planned, subtle actions occurring deep within the complex infrastructure of international banking systems. Recent reports hint that several major Tier 1 banks, institutions such as Wells Fargo, Chase, and HSBC have begun the process of systematically updating their internal software and hardware. This includes refreshing lists of approved exchange locations, modifying the interfaces used by tellers, and granting preliminary access to real-time live screen rates for the IQD, VND, and ZWL to select redemption officers, unlike a typical public product launch, where news is broadcast across major television networks or released through formal government press briefings. This approach appears to be intentionally low-key, perhaps even deliberately obscured from the public eye. Industry professionals are describing this controlled process as a soft launch strategy, which is essentially an incremental system activation designed specifically to test the stability and integrity of the infrastructure before a massive, full-scale public wave of redemptions is permitted. This quiet rollout enables banking institutions to meticulously prepare their cash reserves, secure necessary additional liquidity, and ensure that all redemption centers are properly staffed and equipped to manage what could be a potentially overwhelming surge in investor traffic. Furthermore, this measured approach provides essential time for critical coordination with compliance teams, the implementation of robust security protocols, and the establishment of fraud prevention systems, all of which are absolutely essential in a financial process of this colossal scale. By opting for a gradual, almost stealth-like strategy, banks can effectively preempt the chaos that an uncontrolled surge would bring, while simultaneously providing a clear, unspoken confirmation to those who are closely monitoring the situation that the long-awaited financial shift is indeed underway. In many respects, this carefully measured rollout serves a dual purpose. It is designed to protect the stability of the institutions themselves, and it acts as an unspoken confirmation that the revaluation discussion has progressed far beyond mere rumor. For many years, the IQD investor community, in particular, has been a fertile ground for intense speculation, with countless conference calls, online forums, and updates from self-proclaimed gurus fueling both deep hope and crushing frustration. While these discussions often serve to entertain and energize the community, they historically lacked any form of verifiable evidence and frequently left investors chasing unconfirmable shadows. The recent concrete and verifiable updating of official bank exchange locations, however, represents a fundamentally different and more serious development. It is tangible, measurable, and above all, practical, unlike mere rumors, which are inherently based on assumption and personal interpretation. The active preparation and activation of bank exchange sites required deliberate, high-level action, significant interbank coordination, and concrete internal readiness. Banks do not undertake such fundamental system modifications lightly, nor do they allocate substantial resources without extremely concrete timelines and protocols in place. The fact that these physical and digital locations are being updated strongly suggests three critical realities are at play. The first is readiness. Institutional preparation would not commence unless there was genuine, actionable momentum toward the actual processing of redemptions. This means staff are being trained, facilities are being prepared, and systems are currently being tested in real time. The second reality is liquidity. Substantial capital reserves and financial backstops must already be firmly secured to ensure that banks can fulfill potential redemptions without causing financial instability within the system. This implies a high degree of complex coordination at both a national and, crucially, an international level, as the necessary reserve funds are not simply materialized overnight. The third and final reality is synchronization. The fact that multiple, diverse banks are apparently moving in such a coordinated manner strongly indicates a high level of central orchestration. This coordination likely involves key entities such as the U.S. Treasury, various international financial regulators, and potentially global partners, all working to ensure consistent alignment and stability across the board. For the everyday investor, these distinct signals mark a dramatic and significant pivot from abstract theory to concrete logistical planning, where the primary overarching question once centered on if the revaluation would ever materialize. The community discussion has now rapidly shifted to where these exchanges will physically take place, and how soon the doors to redemption will actually open. This pivot from purely speculative thought to the visible development of concrete infrastructure represents one of the most substantial and measurable milestones the investment community has ever witnessed. The Iraqi Dinar (IQD) continues to hold center stage in virtually all discussions surrounding potential currency revaluation, cementing its reputation as the most prominent currency in the entire RV conversation. Analysts frequently point to a sustained series of structural and strategic developments within Iraq's economic and financial systems that strongly suggest the country is actively positioning itself for much deeper global integration, potentially setting the groundwork for a major, meaningful appreciation in the IQD's value. One of the most compelling indicators cited is Iraq's successful effort to significantly bolster its foreign currency reserves, which are now reportedly above the $100 billion mark, a historic peak for the nation. These reserves function as a critical financial buffer, granting the Central Bank of Iraq, CBI, the operational capacity to maintain exchange rate stability and providing the necessary liquidity to confidently support a potential revaluation event. Beyond the sheer impressive numbers, Iraq has simultaneously committed to and undertaken noteworthy reforms specifically aimed at modernizing its entire financial infrastructure and significantly improving institutional governance. Key initiatives, including anti-corruption drives, the widespread digitization of crucial payment systems, and a comprehensive modernization of banking processes, clearly signal a serious readiness to operate within the established stringent standards of global finance. This transformation makes foreign exchange activity involving the dinar far more credible and transparent. Economists and market watchers have ventured to speculate that these combined, coordinated efforts could realistically lead to a near-term revaluation, with potential exchange rates cited in the range of approximately $3.40 to $4.50 per US dollar, USD. This range would reflect Iraq's substantial oil-backed economic strength and a newly stabilized fiscal position. For US-based investors who hold significant amounts of IQD, these projected potential rates could result in transformative financial outcomes. For instance, an investor holding a specific volume of dinar notes could see returns that dramatically exceed conventional investment expectations, effectively turning a previously stagnant or dormant asset into a highly liquid and extremely high-value investment. While the precise timing of any revaluation event remains inherently uncertain and speculative, the convergence of immensely strengthened reserves, concrete institutional reforms, and verifiable global readiness strongly suggests that the IQD may no longer be just a speculative curiosity, but a currency with demonstrable near-term potential for a significant value appreciation. The Vietnamese Dong VND has long been consistently recognized as the second foundational pillar in discussions about potential currency revaluation, often complementing the Iraqi dinar within both analytical and speculative circles. Vietnam's remarkably rapid economic modernization, its aggressive and expansive manufacturing growth, and its strategic, active participation in numerous global trade agreements have collectively created a robust economic foundation that many economists now believe could eventually support a much stronger VND. Over the course of the last decade, Vietnam has successfully transformed itself from a predominantly agrarian economy into one of Asia's most rapidly expanding export powerhouses, boasting robust production sectors in electronics, textiles, and various consumer goods manufacturing. The country has increasingly become a preferred strategic destination for many multinational corporations actively seeking manufacturing diversification and alternatives to China. This economic diversification has not only significantly boosted the nation's gross domestic product, GDP, growth, but has also noticeably strengthened the resilience of the national currency. Another key signal of growing stability and strength comes from major international financial institutions. The gradual strategic upgrades of Vietnam's financial status, moving it from a frontier market to an emerging market by influential organizations such as the International Monetary Fund, IMF, and major global rating agencies, clearly reflect a growing, firm confidence in its economic trajectory, its fiscal discipline, and its expanding capacity to fully participate in global financial markets. Market analysts who follow this sector project that should a revaluation event indeed occur, the post-RV exchange rates for the VND could potentially range from approximately 47 cents to $2.95 per USD. It is important to note, however, that the implementation of tiered rollout structures and various liquidity considerations could significantly influence the final, precise exchange levels. For existing investors, even relatively conservative gains in the VND could still prove profoundly transformative. The currency's historical affordability and its widespread, general availability have made it a readily accessible option for bulk acquisition, allowing for potentially substantial returns relative to the initial capital invested for those individuals carefully monitoring macroeconomic indicators and the ever-shifting global financial environment. Vietnam represents a highly strategic opportunity where concrete structural growth and significant currency potential convincingly intersect. This dynamic strongly signals that the VND could soon move definitively beyond purely speculative discussion and into the realm of a tangible investment reality in the near term. The Zimbabwean dollar, ZWL, while often receiving less attention in the main currency revaluation discussions, represents a unique high-risk, high-reward opportunity within the broader RV landscape, often considered the wild card. For several decades, Zimbabwe's economy has been tragically synonymous with extreme hyperinflation, and the ZWL has carried an almost notorious reputation as a profoundly unreliable and volatile currency. However, recent, deliberate monetary and structural reforms strongly suggest that the country is making earnest, conscious strides to stabilize its deeply troubled economy and gradually restore some measure of confidence in its national currency. One of the most critical and notable measures involves the new process of linking the ZWL directly to the country's gold reserves, effectively establishing a form of asset-backed currency. Zimbabwe is one of the largest gold producers on the African continent, and by officially tethering its monetary supply to these tangible, real-world resources, the government aims to create a necessary floor for the currency's value, thereby attempting to instill greater trust among both domestic citizens and international investors. In parallel with this asset-backing initiative, significant fiscal reforms and a tightening of central bank control are now being gradually implemented to reverse the country's long history of runaway inflation. Measures such as more streamlined tax policies, a marked improvement in the oversight of public spending, and much stricter monetary controls all signal a renewed commitment to economic stabilization and much-needed predictability. These are all essential preconditions for any serious or credible revaluation effort. Analysts who track this market project that if these new initiatives are fully and successfully realized, and crucially, properly supported by the international community, ZWL could potentially re-emerge in a post-RV exchange range of approximately 12 cents to 50 cents per USD. This projected volatility makes the ZWL inherently riskier than the IQD or VND. The potential for substantial upside gains is very significant for those early adopters who are willing to navigate the existing market volatility. For investors actively seeking diversification within the currency revaluation sphere, ZWL represents not only a purely speculative play but also a potential hedge that could yield significant returns if Zimbabwe's deep economic reforms successfully anchor the currency in both stability and real-world tangible assets. This compelling dynamic firmly positions the ZWL as an important, albeit cautiously approached, component of any forward-looking RV investment strategy. To provide a greater degree of clarity amidst the rapidly accelerating speculation surrounding the potential revaluation of the IQD, VND, and ZWL, critical insights from several seasoned analysts offer valuable professional guidance. Dr. Michael Andrews, a highly regarded geopolitical economist, underscores the profound significance of Iraq's recent strategic positioning within the complex global financial architecture. He notably observes that Iraq's quiet removal from the exotic currency category was the long-awaited green light that many dedicated investors had been patiently anticipating. Dr. Andrews further asserts that with its oil production remaining stable and its foreign reserves at a high level, a major movement in the IQD's value appears to be imminent. He highlights that the powerful combination of fully stabilized oil revenues and substantially strengthened foreign reserves provides the Central Bank of Iraq with both the necessary credibility and the operational capacity to confidently support a revaluation, a crucial point often overlooked in more casual investor discussions. Sarah Kim, a respected Forex strategist, provides detailed insight into the practical operational dimension of these developments. specifically focusing on the quiet, incremental activation of exchange sites across the major banks. According to Kim, this careful, understated activation of exchange sites strongly suggests a phase of highly controlled system testing. She advises that once the required level of system confidence is achieved, the broader public rollouts will accelerate rapidly, and emphasizes that existing investors must be adequately prepared for this shift. Her professional observation fundamentally underscores that the current situation is not just a hypothetical scenario, but a meticulously orchestrated system test, specifically designed to ensure market readiness and prevent any sudden, destabilizing surges in demand. Finally, Jonathan Harris, a well-known banking systems consultant, emphatically stresses the vital importance of the underlying liquidity infrastructure, plainly stating that liquidity is key. He argues that without the necessary capital backstops firmly in place, banks would never risk engaging in live internal system updates. The undeniable fact that these updates are visibly occurring, he suggests, provides powerful evidence that the required funding pools are already fully secured and ready for deployment. Taken together, the collective insights from these highly experienced experts confirm that the developments currently unfolding are not being driven by unverified rumors or wishful speculation, but by a demonstrable systemic alignment across major financial institutions. The coordinated tandem actions of multiple major banking institutions, combined with clear evidence of macroeconomic readiness in the source countries, strongly suggests that the market is steadily moving away from purely theoretical discussion and into the realm of actionable, practical reality. Investors who are carefully monitoring these distinct signals are currently witnessing the early, deliberate stages of what could very well become a historic financial transition. For these observant individuals, careful observation and strategic, early positioning may yield extremely significant financial benefits. Looking ahead, the potential revaluation of currencies like the IQD, the ND, and ZWL is most likely to unfold through a carefully planned series of multi-staged phases. The initial phase is widely expected to involve a number of private, testing windows, during which a limited number of exchanges will occur exclusively through select Tier 1 redemption centers. These initial controlled trials are specifically designed to fully stress test all operational systems, definitively confirm the availability of the required liquidity, and ensure that very high-volume transactions can be consistently handled smoothly without causing any public disruption or panic. Once these critical tests are deemed fully successful and reliable, a much wider public rollout is likely to follow, which will significantly expand the number of approved banks and official exchange locations available nationwide. During this subsequent stage, investors will gain much broader access to live exchange rates and necessary redemption services. Although it is anticipated that the initial private contract rates may still slightly differ from the final, publicly advertised rates. Further, subsequent adjustments in the exchange rates are fully anticipated as the market begins to stabilize, with the eventual publicly available rates designed to reflect the true equilibrium between market supply, demand, and the underlying macroeconomic realities of each country. Finally, global synchronization will play a truly critical role in this massive process, involving coordinated efforts across numerous allied economies, which is essential to prevent speculative arbitrage, significantly reduce market volatility, and maintain orderly and controlled trading conditions throughout the transition. If these current, observable trends continue to progress exactly as analysts project, the coming months of October 2025 could very well emerge as a decisive and historic turning point for these currencies. Patient, long-waiting investors may transition from a state of mere hopeful anticipation to one of active, tangible participation, moving from simply holding dormant currency notes to actively engaging in structured exchanges. The carefully planned sequence of phased rollouts, rate calibrations, and high-level international coordination strongly underscores that this entire revaluation process is being approached with precision planning and a high degree of systemic oversight. all intended to minimize risk while fully preparing for a truly meaningful market impact for US-based holders of the IQD, VND, and ZWL. For these specific investors, comprehensive preparation is paramount at this critical juncture. The absolute first step in this preparation involves meticulous documentation. Investors must ensure they possess proper, valid identification, any available receipts, and fully verifiable proof of the currency's authenticity. These complete records will be critical for achieving a smooth and efficient processing at the redemption centers and for fully meeting all necessary regulatory requirements. Next, bank account readiness is also essential. Investors should prepare both standard checking accounts for typical, routine transfers and ensure they have access to high-value accounts that are fully capable of handling potentially very large sums without triggering any unnecessary operational delays or internal limitations. Tax awareness is another crucial consideration that must not be overlooked. Consulting with qualified financial professionals regarding capital gains, specific IRS reporting obligations, and the potential overall tax implications will proactively prevent unexpected liabilities once any proceeds are realized. Comprehensive diversification plans should also be firmly established. Even very substantial returns realized from a currency revaluation should be managed with prudence, actively avoiding overconcentration in high-risk markets and instead focusing on building balanced, stable portfolios that strategically include a necessary mix of equities, bonds, and other diversified assets. Security remains the top priority for both physical currency holdings and any digital transactions, ensuring the absolute safe storage of physical currency, consistently utilizing secure transfer methods, and continuously monitoring all accounts for any suspicious activity can significantly mitigate the potential for loss or theft. By diligently following this detailed checklist, investors are strategically positioning themselves to fully maximize the emerging opportunity while simultaneously minimizing risk, confidently converting what were once speculative holdings into actionable, highly liquid assets with confidence and strategic foresight. Proper, thorough preparation ensures that when this historic moment of activation truly arrives, investors are completely ready to move decisively and responsibly. Beyond the raw numbers, the market charts, and the daily exchange rates, the potential revaluation of currencies like the IQD and VND carries a profound emotional weight for many dedicated, long-term investors. For years, countless individuals, ranging from retirees safeguarding modest savings to everyday workers and veterans, have held on to these currencies with a complex mix of hope, deep patience, and sometimes quiet, nagging skepticism. Each note they held represented much more than a simple financial instrument. It symbolized a core belief in eventual fairness and the principle that persistence, even in the face of repeated delays and endless rumors, could eventually yield a significant reward. The very recent reports of exchange centers quietly transitioning to live status mark a pivotal, personal moment, one that deeply transcends mere economic calculus. For all the long-term holders, this definitive shift from purely theoretical speculation to operational reality serves to validate years of steadfast commitment, successfully transforming what once felt abstract into a tangible, real-world opportunity. As one veteran investor eloquently put it, "I didn't hold on just for profit. I held on for the promise that persistence pays off." Today I feel that promise coming true. That deeply resonating sentiment is echoed across the entire investor community, reflecting a powerful mix of both relief and renewed optimism. The emotional stakes are particularly high because these specific currencies have often been deliberately misunderstood or outright dismissed by mainstream financial circles, which frequently left dedicated holders feeling isolated in their conviction. Now, as active live exchanges become genuinely accessible and systemic alignment takes concrete shape, these individuals are finally witnessing the culmination of their patience and strategic foresight. In this powerful sense, the entire revaluation story is not merely a tale of financial gain. It is fundamentally about vindication, perseverance, and the deep emotional satisfaction of seeing long-held beliefs successfully materialize in real-world decisive action. The psychological reinforcement of this success can ultimately be as transformative as the monetary gains themselves, offering a unique and powerful blend of hope fulfilled and opportunity fully realized. The very recent concrete updates to official exchange locations signal a historic and unmistakable transition point in the long-running saga of currency revaluation. For countless years, investors in the IQD VND and ZBYL have had to navigate a difficult landscape that was heavily dominated by speculation, unverified rumors, and only cautious, often tentative optimism. Today, the entire scenario has demonstrably shifted. Banks across the United States are no longer simply planning or conducting mere internal tests. They're actively preparing their systems to confidently process real, high-volume exchanges. This fundamental change transforms the discussion from focusing on if a revaluation will happen to when and how it will be implemented, marking a crucial inflection point for every single person holding these specific currencies. For US-based investors, the message is remarkably clear. Preparation time is rapidly drawing to a close. Comprehensive strategic readiness, having all proper documentation, bank accounts, necessary security measures, and specific tax strategies firmly in place will now be the decisive factor, determining who can fully and successfully leverage this unprecedented opportunity. While predictable challenges are likely to persist, and official public announcements may very well be staggered, the underlying verifiable evidence is completely unmistakable. Private testing windows, internal bank system activations, and carefully staged rollout plans all strongly indicate that this is not a theoretical or merely speculative development. It is a coordinated, nationwide financial effort that is genuinely in motion. For those dedicated individuals who have patiently held on to their IQD, VND, and ZWL notes, the period of indefinite waiting is definitively ending. What lies directly ahead is a window of potentially unprecedented financial and emotional opportunity, where persistence, meticulous planning, and careful attention to operational detail can finally yield tangible rewards. The moment for action has clearly arrived. Opportunity is knocking, and it is clearly knocking right now. For those investors who have prepared diligently and strategically, this represents much more than just the potential for profit. It is the ultimate culmination of years of patience, foresight, and unwavering belief. The transition from pure anticipation to decisive action is definitively underway, and those individuals who are fully ready to move decisively stand to benefit from what is arguably one of the most anticipated and closely watched financial events of recent decades. Disclaimer: this script is based on the provided news transcript and is for informational and educational purposes only. It does not constitute financial, investment, or legal advice. Discussions about potential currency reevaluations involve significant uncertainty and risk, and future outcomes are not guaranteed. Investors are strongly advised to conduct their own independent research and consult with licensed financial and tax professionals before making any financial decisions related to the Iraqi dinar, Vietnamese dong, Zimbabwean dollar, or any other currency.